Hi, I'm Kathy. In this video, I'm going to be describing some tax tips for the 2023 season, and thanks to TurboTax, so that you'll be armed with the right knowledge and the strategies to streamline your financial responsibilities and optimize your returns. Stick around to the end of the video to see if you can answer 3 questions about optimizing your tax and help you lower your taxes, save money when preparing your tax return, and avoid tax penalties. Number 1, contribute to your retirement accounts. If you haven't already funded your retirement account for 2023, you have until the tax return filing date to do so. That's the deadline for contributions to a traditional IRA, deductible or not, and to a Roth IRA. Making a deductible contribution will help you lower your tax bill this year. Plus, your contributions will compound because it's tax-deferred cash. It's hard to find a better deal. So if you put away $5,000 a year for 20 years in an investment with an average annual return of about 8%, your $100,000 in contributions will grow to $247,000. The same investment in a taxable account would only grow to $194,000. And if you're in the 25% federal tax bracket, and even less if you live in a state with income tax to bite into your return, you're going to qualify for the full IRA deduction in 2023. You need not be eligible to participate in a company retirement plan, or if you're eligible, your adjusted gross income has to be $77,000 or less for singles, or $123,000 or less for married couples filing jointly. If you're not eligible for a company plan, but your spouse is, your traditional IRA contribution is fully deductible as long as your combined gross income does not exceed $230,000 for 2023 taxes. Paying taxes in 2024 right now, the IRA contribution limit increases to $7,000 or $8,000 if you're 50 and older, and self-employed plans increase the amount to $69,000 plus a $7,500 catch-up contribution. Although choosing to contribute to a Roth IRA instead of a traditional IRA will not cut your tax bill because Roth contributions are not deductible, it could be a better choice because with all the withdrawals from a Roth, they can be tax-free in retirement, whereas your withdrawals from a traditional IRA are typically fully taxable in retirement. Second tip, make a last-minute estimated tax payment. If you didn't pay enough to the IRS during the past tax year, you may still have a big tax bill staring you in the face. Plus, you might owe significant interest and penalties too. According to IRS rules, you must pay 100% of last year's tax bill or 90% of this year's tax bill. Otherwise, you're going to owe an underpayment penalty on top of these taxes. Number 3, organize your records for tax time because good organization may not cut your taxes, but there are other rewards, and some of them are financial. For many, the biggest hassle at tax time is getting all of the documentation together that you're going to need. This includes last year's tax return, this year's W-2s, 1099s, receipts, and so on. So how are you going to get started? Decide how you're going to keep your documents that you collect. I find a simple large manila envelope is a great choice since it's going to be able to hold a lot, and you can write yourself notes on the front of this as you find documents that you still need to check on or accounts that you need to check into. You can also print out a tax checklist to help you gather all the tax documents that you're going to need to complete your return. NerdWallet.com has a simple to understand list that you might want to use. Keep all the information that comes in the mail from January, like W-2s, 1099s, your mortgage interest statements, but be careful not to throw away any tax-related documents, even if they don't look important. Keep them in this envelope for whatever way you're going to store them. Collect receipts and information that you've piled up during the year. Then group similar documents together, putting them in different file folders if you need to, or different envelopes. Make sure that you know the price that you paid for any stocks or funds that you've sold. If you don't know, call your broker or get online to start before you prepare your taxes. You're going to need to make sure you know all the details from your income from rental properties. Don't assume that your tax-free municipal bonds are completely free of taxes either, because having this type of information at your fingertips will save you another trip through your files. Number 4, finding the right tax forms. You're not going to find any forms at the post office anymore or the library, but instead you can go right to the source online. In my previous video here, I list many of the free online providers that the IRS has a relationship with. If your income is under $75,000, you'll also get free advice from them as well. You can view and download a large catalog of forms and publications on the IRS website as well, or you can ask to have them sent to you by mail. I personally use TurboTax because it already includes all the tax forms that I'm going to need, which takes the hassle out of deciding which forms to use. But carefully read their options so that you get the version that you're going to need that's best for you without getting more than you need to pay for. It's a fairly simple program to use with just questions and plain English answers, and TurboTax will help you fill out the right forms. Number 5, itemize your tax deductions. It's easier to take the standard deduction, but you might save a bundle if you itemize, especially if you're self-employed, own a home, or live in a high tax area. Itemizing your worth is when your qualified expenses add up to more than the 2024 $14,600 for those filing single and $29,200 for those of you who are married filing jointly. Many deductions are well known, such as those for mortgage interest and charitable donations. Number 6, don't shy away from a home tax office deduction. The eligibility rules for claiming a home office deduction have been loosened to allow more self-employed filers claim this break. People who have no fixed location for their businesses can claim a home office deduction if they use the space for administrative or management activities, even if you don't meet clients there. This is perfect for those who work exclusively from home. For starters, you must use the space exclusively for business, so no guest room is an office kind of thing counts in this case. Many taxpayers have avoided the home office tax deduction because it has been regarded as a red flag for an audit. If you legitimately qualify for the deduction, however, there should not be a problem. If you're not sure, you probably don't qualify. But if you're entitled to write off expenses that are associated with a portion of your home when you exclusively conduct business, such as rent, utilities, insurance, and housekeeping, that portion of what you pay, then the percentage of these costs is deductible based on the square footage of the office compared to the total area of the house. Number 7, provide dependent taxpayer IDs on your tax return. Be certain and plug in taxpayer ID numbers, and this is usually our Social Security numbers, for your children or other dependents that you can claim on your return. Otherwise, the IRS is going to deny any dependent credits that you might be due, such as the child tax credit. Be especially careful if you're divorced because only one of you can claim your children as dependents, and the IRS checking closely to make sure that spouses aren't both using their children to get that deduction. If you do forget to include a Social Security number for your child, or if you and your ex-spouse both claim the same child, it's highly likely that the processing of your return and any refund that you're expecting will come to a screeching halt while the IRS contacts you to straighten things out. And honestly, that's going to take quite a while. So after you have your baby, be sure and file for your child's Social Security card right away. You generally do this in the hospital so that you'll have the number ready at tax time. Many hospitals will do this automatically for you, but you need to make sure that you're getting that done. If you don't have the number you need by tax filing deadline, the IRS says you should file for an extension rather than sending in a return without the required Social Security number. Filing an extension does not mean you can wait to send in your money. It just means you're going to pay what you think and then file while you wait for the Social Security number. Number 8 is file and pay on time. If you can't finish your return on time, make sure that you file Form 4868 by April 15th. It gives you an extension of the filing deadline until October 15th of 2024. On this form, though, you need to make a reasonable estimate of your tax liability, that's what you owe, and pay any balance due with this request. Requesting an extension in a timely manner is especially important if you end up owing taxes to the IRS, because this extension, again, does not give you more time to pay, just time to finish your filing. So make sure you pay what you guess, and then you're going to owe and gather whatever you need that you're waiting for that's making you delay. Number 9, file electronically. Electronic filing works best if you expect a tax refund, because the IRS processes these electronic returns faster than paper ones. You can expect to get your refund from 3 to 6 weeks earlier if you file online. If you have your refund deposited directly into your bank account, or even better, into your retirement IRA, the waiting time is even less. There are other advantages to e-filing besides the fast refund. The IRS checks your return to make sure that it's complete, which increases your filing to be more accurate. And less than 1% of electronic returns have errors compared to 20% of paper returns. Another benefit is the IRS acknowledges that it received your return. It's a courtesy that you don't get even if you send in a paper return by certified mail. And that helps protect yourself from the interest and penalties that accrue if your paperwork is lost. If you owe money, you can file electronically and then wait until the tax filing deadline to send in your check, along with a form called 1040-V, and this just lets them know what you're associating the money with. And that way you can keep your money earning interest for you until the tax due date. If you pay with a credit card, expect to pay a service charge of as much as 2.5% if you choose a direct deposit of 2.5%. If you choose direct debit payment, you may delay debiting your bank account until that filing deadline as well. And number 10, decide if you're going to need help. If you want to file your own taxes, you can still feel confident and do them with an online option because they'll guide you step by step. They also offer some individualized help as well. No matter which way you file, most of these companies will guarantee 100% accuracy and the maximum refund that you qualify for. Additionally, there are many in-person options as well, so decide with what you're more comfortable with, meeting with someone or filing online. All right, are you ready for your 3 questions? Should everyone itemize their deductions? Does extending your filing to October 15th mean you can delay your payment as well? And does contributing to my retirement account help my tax situation? I'm Kathy. Thanks for allowing me to guide you on your journey to financial empowerment. Please let me know the topics that you'd like covered in the comments below. And if you're new here, please consider subscribing and clicking on the alert button so that you can improve the way that you think about your relationship with money. And thanks again to TurboTax for the tips.
Oh